Moving on, let's see some of the other incomes which are chargeable to tax under the head profits and gains of business and profession. Some received or receivable in cash or kind. This is simple, so I'm not getting into the explanation again. We've discussed this in earlier slides. So received, receivable, accrued, cash, kind, on account of any capital asset. So if there's a capital asset in a business, okay, which business? I'll just come to it a little later. Other than land or goodwill or financial instrument, right? Being demolished, destroyed, discarded or transferred, wherein capital expenditure incurred thereon has been allowed as a deduction under section 35 AD. Let's step back a little bit. So let's first see what is this creature called 35 AD. 35 AD is a section which allows you 100%, and these percentages keep on varying from time to time. Okay. So let's say, for example, suppose on one capital asset, okay, let's call it CA. On capital asset, you claimed 100% deduction, right? After some point in time, when this capital asset is either demolished, destroyed, discarded or transferred, you may get some amount of money, right? And 35 AD is in respect of certain specified businesses including cold chain, okay, and others. So you claimed 100% deduction for this, and when you sell it, you get some money back, right? So this capital asset, which was, let's say, for 100, you claimed deduction of 100 there. Now you get, let's say, for example, 20 rupees on account of any of these four factors. This 20 rupees that you get is going to be taxable under the head profits and gains of business and profession. You may have received this money. You may have to receive this money. The sale has happened. You may get it in cash. You may get it in kind. Doesn't matter. As long as you are getting it for a capital asset, which is not a land, goodwill or financial instrument, okay, and you're receiving it because either this asset got destroyed, demolished, discarded or transferred, then this money that you receive in respect of this asset is going to be taxed under the head profits and gains of business and profession, right? Very simple. Conditions: 1, the business has to be the one which is under 35 AD, covered there, right? You would have claimed a deduction on this capital expenditure under section 35 AD. This capital expenditure is other than land, goodwill and financial instrument, okay? And now you are getting some money, could be received, receivable, cash, kind, because you are either transferring this asset, you are discarding this asset, or this asset has been destroyed or demolished. Destroyed and demolished will be when you get, let's say, something from the insurance company. Okay, so the destruction or demolition happened, you get some money in respect of this asset that is going to be taxed under PGBP.